Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are continuing to work on the assigned homework problems for Chapter 5, the problems from Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and can easily be remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still do not understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, and in the last video, we worked on problem 5-48B, and so now we're going to work on 5-49B, and it says refer to the data for top line from the last exercise, which is 5-48B. However, assume that top line uses the average cost method. Right? So one, prepare a perpetual inventory record using average cost, so perpetual inventory, and using average cost. Round the average cost to the nearest cent, and all other amounts to the nearest dollar. And then we want to prepare a multi-step income statement for the month of November. Right, so let's see the data for 48B. It had said start in November with an inventory of 95 units at a total cost of $11,400. During the month, they had these transactions, and then it had said using the LIFO method, so we're not as concerned with the rest of this. So we need to create a perpetual inventory record. And so as of, let's see here, we're going to put purchases here, and I'm going to try to do this on this slide, so I'm going to kind of write a little bit small. So this is my cost of goods sold, and right here I'm going to put inventory on hand, or the balance. So on 11.1, it had said we had 95 units at a total of 11,400. So we have 95 units for a total of 11,400. And when you divide 11,400 by the 95, you get $120 for the unit cost. Okay, so each unit is $120. That's the average cost. So then on November 6th, we purchase 105 units at $134, which is, when you multiply that out, you end up with $14,070. Okay, now that means we have 200 units now. Okay, so 105 that we just bought plus the 95 gives us 200. And the total of our inventory on hand is the 11,400 plus the 14,070, or 25,470. And then we divide the 25,470 by 200, and we end up with $127.35 each. Okay, so and that's what average costing is. Whenever we buy something, whenever we purchase something, we have to go and recalculate how much the cost of each one is based upon how many units we have, dividing it into the total dollar value of the inventory. Okay. When we sell something, we don't have that issue. Okay. So on 11.13, we're going to sell 100 units at $280 each. Okay. Well, when we sell 180 units, remember that when we sell something, we have to make a journal entry to record our revenue, right? But we also have to make a journal entry to take out of inventory and move the cost of goods sold. So we're selling 100 units, and the average cost on each unit is $127.35. So that means our total cost of goods sold is $12,735. Since we're selling 100, we only have 100 left in stock at $127.35, okay, which obviously is $12,735. So that's the value of our inventory at this moment in time. Now on 11/19, we're going to purchase 150 units at $136, and so 136 times 150 is 20,400. Okay, so now we had 100 units in stock, and we added 150 more, so now we have 250. But our dollar value on hand is $12,735 plus the 20,400. So that's 53133. So it's $33,135. And to find out what the average cost is, we divide that by how many units, which is 250, and we get 132.54. Okay, so that's the new average cost. Remember, every time that you make a purchase, you have to recalculate your average cost. So now on 11/25, we're going to sell 110 units. And when we sell 110 units, we're selling them at $132.54, which is our average cost. When we multiply those together, we end up with $14,579. Remember, we're rounding here, okay? We're doing, we're rounding the average unit cost to the nearest cent and all of the other amounts to the nearest dollar, okay? In the workplace, I would personally actually do everything round down to the nearest cent. I wouldn't round to the nearest dollar, but this is just an exercise. All right. So since we're selling 14,579, okay, we have our total value of 33,135, and we subtract out the 14,579, okay, which gives us 18,556. Okay. We also know that our units went from 250, we sold 110, so that means we have 140, and they're all still at 132.54. So when we multiply those two together, we get that 18,556. Right? So you could have done it either way, to get your total value here. It's just a double check to make sure that you're doing everything correctly. Okay. So then we hit 11/29, and we're selling another 105 units. And again, they're still at 132. So at 105 at 132.54 is 13,917. And of course, when you subtract this 13,917 from the 18,556, you end up with 4,639. All right. But as part of the double check, okay, we sold 105 out of the 140 units, which means we only have 35 left at 132.54. And when you multiply those two together, right, it should come out to the $4,639. Okay, so that's how you know you're right. Okay, so then you can just, if you want to do some totaling, you've had 255 units that you purchased for a total value of $34,470 in purchases. your cost of goods sold, you had 315 units that you sold for a total cost of goods sold of $231. Okay, and of course, your units on hand are 35, and the total value of your inventory is 4,639. So you only have 35 units on hand at 132.54. Okay. Knowing how much you have for a cost of goods sold, you're going to use that in order, that figure, and even your purchases, you can use that in order to balance, check the balances in your general ledger accounts when you have to make these journal entries, and that's how you keep track to make sure your work is correct. Okay, so that's creating the perpetual inventory record. Now we just need to create a multi-step income statement, and I'll just briefly go through this. Here's the name, top line, income statement. I'm just abbreviating here. Okay, so this is the month end. You should all know how to do this already in the proper format. And if you don't, look at the solution, but go back to your go back to the beginning chapters on how to create an income statement. So I have sales revenue. Now for the sales revenue, okay, we sold 100 at 280, which is 28,000. We sold 110 at 280, and we sold 105 at 280. Okay, so really all we need to do is we have 315 units that we sold at 280. So I have 315 units at 280. You multiply those together and you end up with like $88,200. Let me just double check that. 315 times 280. Yep, 88,200. So my sales revenue is 88,200, less my, let me move this over, and I'm supposed to be using multi-step, which the solution isn't using multi-step. So less cost of goods sold is, my cost of goods sold was this 41,231. So less 41,231, and that gives me a gross profit of 46,969, and then we take out, let's see here, it said it had operating expenses of let's see here, 9,000 right there. So then we take out our operating expenses of 9,000, which gives us a net income of 37,969. Okay, and so that's just a quick income statement based upon the data that we have. Okay, so that's it for this problem, and if you have any questions, feel free to contact an instructor.